Whether it's in Tesla's vehicle assembly plants or Amazon's warehouses, there's a lot of money being invested in automation. One company, Teradyne, for years has focused largely on supplying semiconductor test equipment, but recently they have acquired 3 major robotics companies. There they are, Universal Robots, Energet, and Mir. Why are they doing that? Why the big bet on automation? Joining us now is Teradyne CEO Mark Jagiela. Good to have you here.
Thank you.
Look, when people look at your revenue stream, they're going to see 75% of your revenue still comes from chip equipment testing. So what's going on with robots here? Are you trying to change what Teradyne is?
Yeah, look, I think testing electronics has been around for almost 60 years now. It's a very good business for us. It's also quite a mature industry. So we're looking for new platforms of growth for the next 50 years for the company, and automation, and this new form of automation in particular, is a perfect platform for that.
So what kind of robots do you sell?
So the first acquisition we made 3 years ago is an industrial arm about the size and scale of a human arm. If you looked at it, it has about 6 joints, and it looks about like your arm. We recently added to that a collaborative mobile platform, so it's a little robot that moves around your factory delivering material, and then some technology, software technology on top of that.
Do robots destroy jobs? We're showing video of your robots right now, but I see people that are in there. And I ask also because in the context of what we've been hearing related to Tesla, Elon Musk's great desire to have almost a fully automated production line. And what he's discovered is that when you fully automate too soon, you fully automate a lot of mistakes, and he's had lots of trouble. What's the trade-off there between increasing automation and still having humans involved?
Well, our products are by design collaborative robots, meaning they're built to work with humans, and they allow incremental automation. So you don't need to take your whole factory, build it up to be automated from scratch. You can start with small islands of automation, and there's generally people involved. There's not safety cages. There's a person training the robot to do a task and potentially retraining it to a different task the next day. Or if the robot runs into trouble, a human can come up and help it work through the problem. So it's truly collaborative, and it avoids this big bet kind of automation that traditionally in heavy industry companies have had to make to automate.
We're going to bring up a one-year chart of your stock. If people look at what happened in April, you got hit really hard because what happened still within your chip equipment testing, particularly when it comes to Wi-Fi. At what point do you become a company whose stock trades on robotics, which is still less than 10% of your revenue, versus being a chip equipment company that's, rolled in with KLA Tencor and AMAT and all those others?
Well, we have a ways to go there, but frankly, the industrial robot business is growing. Last year it grew at 70%. It's grown at in excess of 50% every year in the company. So at the rate we're going, we expect this to be greater than $1 billion business for the company by 2021. So we are within, let's say, 5 years, I think, of the company having the center of gravity shift over toward industrial automation if we're successful. The chip testing business has been phenomenal. The downside of it is volatile. The year-to-year moves in the revenue stream there are unnerving to a lot of investors. But that over time hopefully becomes a smaller part of the overall story of Teradyne.
Wish you the best of luck on that big change in the company. Thanks, Mark.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.